for the Fed to cut rates when they're so worried about inflation doesn't quite add up. Consumer spending takes a pretty big drop and kind of ties in with some of the lower consumer confidence and consumer sentiment numbers we've been seeing lately. My name is Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue, and we are very excited to kind of share a little bit more around consumer spending and income here this week as we break apart some of the more recent data. Our goal every Thursday is to bring to you the market news, the data, the trends we're watching, hopefully weed out some of the noise along the way. And again, this week is going to be really heavily focused on the consumer, both on income and spending, but also on inflation, because obviously that affects us as consumers as well. Plus, we kick off Jobs Week with the ADP employment report, so I will share that a little bit as well. And a great question of the week about how all this translates to the Fed ahead, because there's a big shift in tone about what the Fed might do now moving forward. So what I want to start with is a lot of the data that we got actually last Friday to kick things off here. So last Friday, we had income, spending, and inflation numbers all come out. Personal income was up 0.9%, so that was a great number to see. But personal spending was maybe the focal point. Personal spending was down 0.2%, and I think that this has led to a lot of conversation about how strong the consumer is, and if there's some challenges, which there may very well be, especially when we look at how this pairs with the consumer sentiment and the consumer confidence numbers that we covered, I believe, last week as well. Generally, what this would mean, as you might imagine, especially with income up, is that maybe people are spending less, saving more. But one thing I do want to highlight, not to say that this number isn't important, but just keep in mind, this is January's spending number. So this is coming off the back of holiday spending in December, right? So just keep that in mind a little bit. That number being down is a month over month number. And so if January is down a bit from December, know that, we obviously have a much higher number typically in December as we're doing holiday shopping and all the like. So not to say it's not important. There's definitely something to kind of keep an eye on here, but I do want to put this in context a little bit, just because I think if you look at the number in and of itself, it might be more concerning than maybe the reality. Now, next month, if we see something similar, then we really want to pay attention, but hopefully that helps just give a little context. And then in addition to income and spending, we also got the PCE inflation data. So we will actually get CPI next week, so we'll be talking about that. But on the PCE index, we have both core and headline numbers up 0.3% as well. So certainly, higher than it has been, not higher than expectations. That's actually right in line with what the market had expected, but higher than what the Fed's looking for, that's for sure, and a bump up, from some months looking back. We also started off Jobs Week, and so this week we had the ADP employment report come out showing that we only added 77,000 jobs for the month. So this is significantly less than expectations, and something to really keep an eye on. Now, keep in mind, coming up next week, we will finish up the Jobs Week because we'll get the jobs report tomorrow, so we'll be sure to cover that. And then CPI and PPI, so inflation data. But keep in mind, this ADP employment report has had some challenges in the past, so don't take this as a clear sign quite yet. But it will be very interesting to see that jobs report tomorrow and how that coordinates or not, I guess, with the ADP employment report that we got earlier this week. So be sure to tune in next Thursday. Again, jobs and inflation again, but a different measure are going to be the key focus areas there. And then a really good question of the week this week is, with the Fed meeting coming up, really, even with inflation running higher, there's actually now a story or a narrative, maybe is a better way to put it, the Fed's going to be cutting rates. And so the question is that true? And I will share, I don't have the crystal ball here. If you would have asked me this about a week or so ago, I would have said absolutely not, because we had a giant inflation numbers, kind of coming off the back of those. But here we are with PCE index still showing pretty high inflation, and the treasury market, so the bond market, is starting to price in a bit of some rate cuts ahead. Whether that happens next meeting or not, that's a big question mark. But it's in the conversation now, which is really interesting because, again, they just paused, and just not that long ago, I think the general consensus was they were done for a long time. Now, the story is really turning to potentially be more about cutting rates. And I think what I will share is that next week we'll be telling, first off, we'll get the CPI and the PPI data, which was the extremely high numbers last time. So that will be very informative. But, it's really interesting because, again, this inflation story has not really changed. And something we were talking about internally the other day is if you go back to late last year, actually inflation has done nothing but come up since. So there was about a 2-3 month period where inflation came down and was really looking in check. But it's done nothing but go up since. And so we don't hear much about that, but that's the truth of the matter. And for the Fed to cut rates when they're so worried about inflation doesn't quite add up. Now, the reason I think this is coming up is because of this jobs report, as part of it. So ADP employment, again, showing only 77,000 jobs. And how this is maybe affecting the consumer and the economy to some degree. Markets have turned. Now, keep in mind, I think that, we hear about how bad the markets have turned, but the reality is we're about flat for the year, as of yesterday anyway. So it hasn't been that much of a shift in markets. Certainly, it's been a bit of a downturn the last couple of weeks, but maybe not quite as extensive as it might seem on the surface. And so that combination of things, I think, is why the Fed, this conversation of the Fed cutting rates is coming back into play. I guess what I would share is that I don't know what the Fed will do, but I think that inflation will remain an issue. And so I think, I think I think that the Fed needs to kind of keep that in mind. And I don't think, again, that rate cuts in and of themselves necessarily control inflation. There's other tools that I think do more. But nonetheless, I think the Fed really needs to keep in mind that inflation may not be under control quite yet. And so, a rate cut might not be the best path. But we will see. And we'll definitely keep you posted as things kind of transpire from here. But in the meantime, be sure to tune in next week because, again, we get the jobs report tomorrow and inflation data next week. So we'll be covering both of those. And once we get those data points, that should give us a more clear picture of, really what's going on in the labor market, as well as what's going on with inflation, which will kind of dictate, I think, what the Fed may be looking at here moving forward. So thanks for tuning in. We will see you next Thursday at 3. And in the meantime, have a great upcoming weekend.